What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible. So without further ado, let the intro roll and I will see you on the charts. In today's video, the pair that I will be covering is Euro USD. So first, I will be giving you guys the technical analysis for it. We will then go and see what we have from an order flow perspective with the commitment of traders, which is what hedge funds are currently doing in the market. So we will be monitoring how they are moving their positions in time. And obviously, if you're able to track and read how the biggest banks and institutions, basically the biggest speculators in the market, are moving their money, you do have an advantage over your competition in the market. And by the end of the video, by using the combination of our technicals and our order flow, we will have an advantage over our competition in the market, and we will be able to understand where we can be looking for the highest probability scenario on Euro USD. So starting here on the monthly time frame, what do we have? Now here on the monthly, we consider the market has just provided a nice impulse to the upside, followed by this correction. Now, generally speaking, after an impulse and a correction, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has just retraced exactly to the 50% of the Fibonacci taken on the impulse leg. And if you're asking yourself, okay, but why has the market retraced exactly to the 50%? Now, the reason for which the market retraced exactly to the 50% is because the 50% was lining up with the previous resistance, now turned support, that we have at this area, basically creating a confluence of support at this zone, which the market has just tested and rejected to the upside. And this is something that the market does most of the times. Most of the times the market will retrace to the Fibonacci level that is aligning the best with structure, which in this case was the 50% of the Fibonacci taken on the impulse. So here on the monthly, we had a perfect impulse correction to retest the previous high, which is the previous resistance turn support. And at this point, what you expect is the continuation to the upside for the creation of a higher high and completion of this impulse correction and impulse pattern to the upside. And in fact, we consider the market has already started the rejection to the upside away from this support. Going down on the weekly time frame, what do we have? Now here on the weekly, we have quite interesting structure. We can see, as we have already said on the monthly, that the market really just tested and rejected quite aggressively the zone to the upside, and currently we are breaking back above the support. In fact, this area was quite strong support here. The market broke below. Now the market is breaking back above, and at that point, what we can expect is for the market to provide even more continuation to the upside. Now this weekly candle here has just closed back above this previous support, which means that this area is now again support. Now, why do I say again support? The reason for which I say again support is because this area, after the market broke and closed below it with this red candle here, was turned resistance. Because as you know, in the market, previous support, once it is broken to the downside, is turned resistance. So we had a break below the support that turned resistance. However, this break ended up being a fake breakout, which by the way was exactly what we expected, and the market broke back above the zone, and now it has closed back above the area, confirming this area again as support. And usually what happens most of the times in these cases is that the market creates a retracement, goes and retests this new support before creating the continuation to the upside. Going down on the daily time frame, what do we see? Now here on the daily, we consider we have quite interesting price action. Now I had spoken about Euro USD from a daily perspective quite a lot of times. I spoke about Euro USD after this overextended W formation when the market was here. I made a full breakdown explaining all the reasons for which from here we expected the market to create this move to the downside, and in fact, that is exactly what the market did. Then we had the creation of this overextended W formation, and again, I made a full breakdown when the market was here explaining why we wanted to see the market create this move to the downside. And again, that is exactly what the market did. Then we had the creation of this M pattern, and from here, I made a full breakdown explaining why we wanted to see the market complete the pattern at the neckline. Then I made another full breakdown of Euro USD after this M pattern, and I explained all the reasons for which from here. First, We wanted to see the correction, and then from here, this continuation to the downside. And again, that is exactly what the market did. And then from here, I made a full breakdown explaining why we wanted to see the market create this move to the upside. And again, that is what the market gave us. And by the way, I will link all this previous analysis in description. So you find all these previous breakdowns in description, so you can go and check them out for further reference and more free education. If you have any requests for other breakdowns, make sure that you leave it in the comment below, and also make sure you like and subscribe. Now, at the moment, what we have is a market which has just reached the previous high from a daily perspective. Now, this is a pattern that is quite clear to identify. You have a move to the downside, so impulse to the downside, retracement, lower low and equal high. Now, when you see the market create an impulse, correction, lower low and equal high, what you expect after that is for the market to provide a retracement before the continuation to the upside. Basically, the creation of this inverted head and shoulders, which means that here on the daily, what we can expect at this point from a technical perspective is a retracement to the support that we have all across this area. In fact, this zone was acting as very strong support here, against support here, and it should be acting again as support here. And we can expect a retracement to this area before the continuation to the upside. And now we also have this daily candle here. And when you see a candle like this, with a red body and a long wick, what you actually expect is for the next candle to fill in this wick. So we expect a bearish start of the week for a retracement back inside of this area before the continuation to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders perspective, which is what the biggest speculators in the market are doing, what we can see is that with the last report, net positions have increased. We went from having 137k net positions to having 140k 8.2 net positions, with 220.9k longs and 80.7k shorts from an institutional perspective, with an added 4k longs and only 100 shorts, basically increasing the long exposure from 32.1% to 32.8%. And the short exposure also increased slightly, but obviously the long exposure increased more than the short because we had more longs than shorts getting added, net positions increasing, and longs reaching 220k from the 216k that we had here. So overall, the euro is starting to get quite bullish. However, it's not that bullish yet. We don't see that strong amount of longs added and shorts getting closed. So it's pretty clear that a retracement to basically create an accumulation of longs before the move to the upside is definitely possible. And that is in fact exactly what we will be waiting for here on EUR/USD with students. In fact, what we will be doing is waiting for the market to provide a retracement inside of this area. Now, I already spoke about at the beginning of the video of the fact that after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. Now, if we take our Fibonacci from the low to the high of this impulse, what we can see is that we have a perfect 0.382 Fibonacci retracement lining up with the previous support that we have at these areas, which is now against support here. So what we can actually expect here on the daily is for the market to provide to us a correction to test this support before creating the continuation to the upside. So we have a very strong confluence of support inside of this area from which we can be looking for a nice longing opportunity. So the way in which we will be approaching this with students is as usual being reactive and not predictive. If the market will give us a retracement back inside of this area, now exactly inside of here, this is where we will be looking for a potential opportunity with students. And how we will be doing that? Now, as usual, as I just said, we will be reactive and not predictive. Monthly, weekly, and daily combined with the COT data are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So with students, what we will be doing when the market will reach this area is monitor price action from a 4-hour perspective. And we will be waiting for the market to shift from a 4-hour bearish market, as we will have, to a 4-hour bullish market. And only if the market will shift from a 4-hour bearish to a 4-hour bullish market, only at that point we will be adding EUR/USD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and completion of this impulse, correction and impulse pattern to the upside, and creation of a higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also comment below and let me know which pairs you would like me to cover in my next videos. Also, make sure you go and check out the mentorship program. It's a very complete program. The link is in the description. First, you get all the rules of my rule-based strategies, and then you trade the strategies with me. Each and every day, you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as having me answering all your questions every single day, including the weekend. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.